Welcome, retail traders. The singing day trader is back. Today I want to talk about NVDA. NVDA had some great earnings, and we're going to see what was kind of in the news here, just kind of go through it. NVIDIA jumps and Robinhood sinks after earnings. So earnings were good for NVIDIA. Chip shortage has been a long thing coming, analysts have said. So we've got that baked in. Robinhood revenue doubles in second quarter. So blah blah. Everybody knows that trading slows down in the summer. And Josh Brown has compared NVIDIA to Apple and Microsoft. So there you go. That's a pretty good deal right there. Josh Brown article here said NVIDIA is trading higher Thursday after the company announced better than expected second quarter financial results. That's a good thing. Earnings per share were up 2 cents. They had sales, the quarterly reported revenue of $6.51 billion, which beat the estimates of $633. Good news. NVIDIA expects the third quarter revenue to be at least $6.8 billion, so we know that their future forecast outlook is good, plus a minus of 2% versus the estimate of 0.653. So there you go, a little bit under 6.8 billion. Give them a little curve there of 2%. Jack Brown takes his take on it. Says NVIDIA is a must-own stock for growth investors. So he thinks it's a growth stock, which means it's a long swing, and we want to try to get in here at the best volatility that we can, or at least the best support that we can. So we have NVIDIA here on the 20-day. We're going to take a short look at it on the 3-year. You've seen we've had a great run here in the past 3 years on this stock. It's ran all the way from a low of $31.30 to a high of $208.75. We're building a little flag right here. We built a flag right here. I call this the blowhorn pattern, or at least an upward wedge. As you can see, I'm going to draw them trend lines in. So that, it was definitely a growth stock back here every time it touched the 200. So now we got to use the 21 as a solid support and the 9. Basically, we've been following the 9 up, so that's where we got to try to take the entry at. We're going to draw a trend line right in here at this support level that we see right here from this gap up and this candle right in here. So I'm going to magnify that up just a little bit to try to find a solid support. And I think that solid support's definitely going to be right in here. And right in here. We'll take this one out. I mean, it would have to really knife hard. We'll leave it in there for right now. But that's your solid support right there at 193.25. And for a strong buy, we'll look at a different time frame. But this is going to be like the resistance to break on the weekly, right around 201.29. Let me change these. I want to change these colors here. Start fresh. Start with a cleaner perspective. Get that 179 right in there. And we've got that support level right here that we want to get. Get it right on. I want to get it precise. And then the resistance level to break will be right up in here. That'll be like the resistance that we need to break past 204. I think we're definitely going to start building up, but this needs to consolidate in a Darvas box. We're going to look for the best possible entry for this stock to get into the trade. And I'm really liking this area right in here on the weekly. So we're going to change this. We're going to change this to a red. And then we're going to go to the yearly. We'll take the chart to the yearly now and see if there's anything that I've kind of missed in here. I definitely like this low support right there at 190.37 to hold. So that's going to be our support channel. Anything below it's going to be a strong buy. Anything below that 190, I'd start taking the trade and maybe looking for the sneaky snake early in the morning on the 1 minute time frame. So we're going to put another resistance line right here, and that's going to be right at 200. So that's what we got to get above and start building up momentum. That's going to be the magic number, $200. If we can start building momentum next week, or even start today, you might have a little bitty pullback, but I'm not seeing it no lower than 190.37 for right now. And that'd be, anything below that's going to be the buy zone. And then anything above it's going to start being resistance above 200. And hopefully we can take this flag that we're building right now, and I'm going to draw that out for you. We're getting ready to squeeze here in a day or two. So sometime next week, let's not take it from there. Let's take it from here. We want to build this trend line out. That's going to be the resistance to break, and this is going to be your support level to hold. And we'll extend both these out to the right. This one out to the right. So we're getting ready to squeeze. As this line goes up and this line goes down, here probably next week. We did have some selling pressure come in at the end of the day, but to me this is a bullish candle. It's just the buyers and the sellers are about even, and we did build the body above the previous day. And we had these 3 black crows, which I think is a good attractive reason for this stock to get back up to at least to a higher level of right around 201.81. So that's the one to get it above that resistance level of that last candle right here. We'll just make it 201.40, and we'll change that trend line to red. That's going to be the, whoop, that ain't what I wanted. That's not what I wanted. It's a 201.40 right there. That's what I want. Change that to red. So that's the resistance, that 201.40. If we can start building up upon that, that'd be great. Starting next week, we'll start to squeeze on this thing, or we'll start to break out above this trend line. If we can build a candle, a daily candle above this trend line right here, that price is probably just right under 200 bucks, 198, 199. If we can build a candle above that, and the body stays above that, we'll definitely top and have a double top break. I'd be long in this stock if you can get in right around 190 area. We're down here in the buy zone. This here is going to be the buy zone. It's where you really want to start to load up. We'll type that in here. This is going to be the consolidation zone, and this will be the resistance. And if we can build, like I said, above that 201.40 next week and build a candle, we'll definitely double top and break this resistance here at 206.51. But for long term, I still think you're in a good trade here. Forecast is good, earnings are good. They're going to start getting back in these chip stocks because of supply and winter coming up. They're going to be robust in what they can to get out, because we are into a new economy. It's going to be called the gig economy. More people are going to be working from home and off their computers. So it's definitely a strong buy. Once we get past that $200 level, we should get this thing up to 220 pretty fast, pretty easy, at least by, I'd say, before Christmas. We're in a couple of months. And this thing can take off too. I mean, that's the way this market is. They start piling on one stock, and the thing can fly. So if it jumps past and you get up there to that higher range, rinse and repeat. That's how I'd trade it. Long investment, take it to 220 if we break that 201.40. And that's NVDA. I wish everybody a great day, and we'll definitely see you in the morning I'm live if you want to watch me trade live on YouTube, 8 hours a day until I get tired of it. But I've been teaching my trading strategy called the Sneaky Snake and coming up with some other ideas, some other strategies, at least until the first of the year, and then I'm going to see what I want to take them from there. But I've been sitting behind this desk for 17 years, and I'm a technical trader. I'm not a fundamental trader. I trade only on price action, and I let the market dictate how I trade. So I wish you all a great day, and we'll see you at open.